Hey guys, I'm Derek Wilkins with LTC Tree. Today we're going to do another podcast and we're going to talk about how to refinance your old annuity. And what does that mean? Kind of comparing refinancing annuities to refinancing your old mortgage if interest rates drop like everybody did a few years ago. I'm with my cousin Drew. Drew, how's it going?
Hey Derek, it's going well. So this is a concept we thought of a couple weeks ago and we decided to make a video on it. Everybody understands refinancing your mortgage when rates go down, but rates have been going up. And so that means annuities have gotten better over the last couple of years. And so we think there are a lot of people out there that probably have an annuity, what, a couple years old or older?
Yeah, older. So what we're seeing right now, and I guess maybe I'll, just talked about the history of fixed annuities and how the interest rates they pay are tied really to that Fed funds rate. So if you think back to the financial crisis in 2007, 2008, that's when the Fed had to drop interest rates near zero to keep the economy going. And after they came out of it, they really didn't raise interest rates until what, 15 years? So there's a lot of people from mid 2000s to 2020 who are buying these annuities. And so, but what you're buying is you're buying annuities with really low interest rates. So what happened in, I think, January of 2022, that's when the Fed started raising that interest rate. So it went from a Fed fund rate of, I think it was a 0.5% to all the way to 5.5%. So that is a 500% increase that the insurance companies are offering, that are creating these products with. And so if you
Right.
have
So
an old annuity, there's a very good chance. Go
anybody
ahead.
that was buying an annuity back before 2022, it was in such a low interest rate environment, they may be able to, like, if someone's watching this and they're trying to decide whether or not they should keep watching, what's the cutoff year you would say, like early 22 or before?
Yeah, I'd say if you've bought an annuity, I'd say 2022 and on, you're probably fine. But if it was pretty much any but time between 1990 and 2021, and you have an annuity, you definitely want to give us a call to see if we can improve your interest rate. Because, there's even companies, say you bought an annuity 5 years ago and you're still in a surrender period, which a surrender period means you got to pay a fee to get out. Interest rates are so high and these insurance companies are so healthy, they're competing for business. So there's bonuses out there that will pay up to 20% upfront bonus, which will more than pay a lot of these surrender charges. So these companies are competing for your business and they will almost buy you out of your old annuity if it makes sense.
With the mortgage analogy, you have closing costs, but the closing costs are more than made up for by the savings. The opposite is true with the annuity. You can potentially generate so much more income or have so much higher accumulation values that it makes sense to potentially refi. And I think you're right. Like, really, we just need to take a look at it, and we'll know in 2 minutes whether or not we should continue the conversation or not. We're not going to replace something that we shouldn't replace. So it's really just a quick call to figure out whether an annuity from the past is worth refinancing.
I had a client who they bought an annuity in 2011. They had called us up. I guess they lived over in China, over in the United States. So we had not been in too much communication over the past 10 years. But they called me up and said, "Hey, we got this annuity. Let's re-examine it." So we actually went and re-examined it. And back when they bought it in 2007, I'd say all the interest rates that were great at the time that they got it were about half of what is right, what they can get right now. So
Yeah.
we just swapped them into a new one. They got a 20% bonus on the money too. And they're making guaranteed more interest on the product compared to what they used to have. So, if you bought an annuity in the past, don't think it was, you didn't do anything wrong. It was just at the time that was the best interest rates were. If you have an older annuity, there's a really good chance that you could just, again, refinance your annuity and get a much higher guaranteed interest rate.
Yeah. So in some, if you have an annuity that's a couple years old or older, you may have to pay a surrender charge to get out of it. But because there are bonuses on some of the newer annuities, it more than makes up for it. So if you want to stay in an annuity concept, but you want a higher interest rate, let us know. And the the good annuities that will provide the highest accumulation are usually like 7 to 10 years, somewhere in that sort of, year range. So if you're only a couple, 3, 4 years into it, we won't push the stop date too far out into the future. It will go out perhaps a little bit.
Yeah, exactly. And so what we are is we're a broker. So we essentially work for all the insurance companies. So our motto at LTC Tree is we work for you, not the insurance company. So if you call us, we will go to the market. We have some software that can shop every single annuity out there and that's approved in your state. And we'll show you all the companies, all the options on a side by side spreadsheet and really kind of help you drill down to figure out what is your best annuity and what's your time horizon for actually wanting to use the money.
Okay, just a short conversation to get some goals, and then we'll know whether we should continue the conversation and get more specific or not. So, all right, let's wrap up the concept. Refinancing your annuity, it's a great opportunity in 2025. If you bought something in 2022 or before, let us know. So we are LTC Tree, and we have a website at annuityfacts.com. I'll put a link to it down in the show description, and just give us a call on our 800 number. We can have a quick conversation. It'll probably be Derek or I who answers the phone, and we can quickly determine whether or not it makes sense to explore further.
Sounds good. Hey, Drew, good to see you today. See you guys.
Yeah, you too. All right. Bye, Derek.